Yo, welcome guys to my first video. This is gonna be a video where I'm breaking down a trade I took on NQ long. I'm gonna break down the thought process behind it and yeah, from the high time frames to the lower time frames and then try to illustrate where I got my bias from a bit later in the video. So first off, we start on the daily chart and the 4 hour where I'm looking for any point of interest, which really what stands out to my eye when I'm taking a look at NQ at first here is these two external swing points, right? In here, I'm not too interested in trading it because we have failure swings on both sides. As you guys can see, we have failure swings here at the top, and we also end up having failure swings here at the bottom, right? So you want to be trading away from what forms as a protected swing and towards failure swings, as they tend to act as a draw on liquidity. So until either of these points have been reached, I'm just waiting. So, seeing when we take this low, what happens here? We have a few different opportunities, right? We can either, continue to break lower and then that'd be a different scenario. But here we get a reaction, as you guys can see here as well, on the hourly and the 30-minute. Once we return back into this range, we're looking for some sort of confirmation on the higher time frames, which we have a 30-minute change state of delivery here, right? Which is a change state of delivery is the close above the series of down closes that creates the low. So this would be the change state of delivery. And once we have that, going into the next day, this is a bit late in the trading day, so I'm not taking anything here. But that sets the bias for the next day, right? Because I want to be trading towards failure swings on the other side, which we have a bunch of here. We had that on ES as well. So going into the next day, going into New York, which starts right around here, 7 a.m. I'm looking for longs. Very one-sided going into the day. And we also have the daily open, which is right here, which means we have a very small opposing wick on the daily. As you guys can see here, let me show you. Yeah, this is the daily wick, right? Only a few points, which is ideal for proper expansions, and in this case to the upside. So going into New York, I'm watching to see if I can get any long entries. Right here, we're just waiting. It's a bit choppy. Once we get to this low, it's still a bit early in the day, but I'm watching to see if once we take this low, if we can come back up here and close above to get that confirmation that this should be a protected low. But we failed to close above here, as you guys can see, go to take out the low once again. So once we take this low again, we want to be looking at the series of candles that took the low, which is this series now, since it made another low. And once we get the close up here, that's where I'm looking to enter. This is where I took my entry. You'll see the executions in just a second. Putting my stop at this low and then targeting, you know, failure swings over here. And what really stands out to my eye in this case are these failure swings, right? So I'm targeting this for most of my position, which is just around the 3.5 R. And then I believe I held one runner to that is right around here. And then the final target would be, the daily open up here. Yeah. And then eventually we would be looking to, let me show you guys, towards the other side of the range. So if we just go through that, let it play out. Obviously, I'm not expecting this whole range to happen in one day. But if we just take a look, this should be the next draw. If we wait a bit, let me speed this up a bit. And there it goes. That's the next day, right? And here you guys will see my executions on the right of the screen. And now I'll be showing you guys an example of how I approach ranges and how I get my bias, like the one trade I just showed you. So let's say we're in a range, right? We're just trading internally, creating failure swings on both sides. Now here in this range, while we're not tapping any of the external points, we're not interested. So we're just gonna wait patiently here. This is more likely than not just guessing if you're trading within this range and don't have the context. So personally, I'm just waiting to see either of these sides getting taken out. And let's say we take out the high here, right? There are two opportunities. One being that, we go higher, we get some sort of down close candles on the higher time frame, and then we manage to close above it like this. Then I will potentially be looking for, bias. This is called a true breakout. So where we just expand further to the upside. Other one being that, which is the most common case, this one, that we, go back into the range. And this should act as a swing point we don't want to get back to, right? We shouldn't return back up here. So, as said, we'll be looking for a change state of delivery on the higher time frames here to confirm that, you know, the reversal. And once that reversal is confirmed, I'll be looking most likely in the New York kill zone. I'll be looking to trade this down to the opposing side of the range where we have a bunch of failure swings ideally, which should work as a draw pretty quickly. That's where we get the proper expansions. So you want to be skipping all of this and focusing on when we get these signatures, right? Because that's where price moves very one-sided very quickly. That's what you want to catch. With that said, this is the first lesson and there are many more to come. And make sure you guys leave a like and subscribe and feel free to join my free Discord where I'll also be sharing gems here and there. The Discord is in the description.